Hello everybody. Welcome to the Blue Day being on February 9th. We are at 3:46 p.m. and that's local Eastern Standard Time. So let's get over to our world famous contact form. If you're interested in what I'm about to show you, want to know how to basically educate yourself on what to invest in terms of ETFs and currencies, what I'm about to show you might change things for you. Alright, so I've been working on the reports the last couple of days, and what I want to show you is some of the pairs or instruments on Awanda that is proving to be quite useful. So I'm going to show you a big list here. Well, actually, I can show you right here. So right here is what I'm working on today. This is from Awanda using harmonic scans, which I've always used to do on Motorwave. Came up with this list right here that's highlighted. Ran them through portfolio optimization. Tried to get a uncorrelated, best performing via Sharpe ratio with lowest volatility. And I have to tell you, after doing it, it gets more complicated as you add more instruments, down to 5, and I'm pretty happy about it. These are, as I said, uncorrelated. So if you're on the podcast, you're going to get a mix of currencies and ETFs. So this is what's proving to be potentially optimal. Very simple. It's just US dollar and Japanese yen, S&P 500, and these are symbols you can find on Yahoo Finance. S&P 500, the UK 100, and again these are indices or ETFs. British pound against the Japanese yen, and the Hong Kong dollar against the Japanese yen. So we're going from, well, I'll just show you. So again, these are found on Motorwave and using Awanda data. We never trade on Awanda. But let me just show you these pairs that we went from. So what it basically does is it will look for anything that's non-correlated, that is short-term performing, and has lowest risk based upon data, raw data you feed it. It's daily data, and it will weed out, depending upon how you can do it, based upon your broker you're with. If you can short these, great. If you can't, then you may be only able to do long only. So here's what the Australian Japanese yen is. This is a daily. You can see it's got a temporary upswing, but that got filtered out because of this volatility. Another one we can take a look at here is this one, comparative to what I just showed you with Japanese US dollar, Japanese yen. Okay, you can see here it's a little more stable, so you're not going to have this crazy volatility. So that gets weeded out, the Australian Japanese yen. Another one that people might ask about is gold. Gold is in a temporary upswing, but let me just show you what we're dealing with here. So let's say gold in, let's say, so I don't know, let's just say XAD, the top one here on Awanda is gold and Canadian dollar. So you can see here it's fairly flat. These downswings, they get weeded out again. Another one that was potential is copper. So again, these are monthly views, okay? So these are long-term trends that I'm showing you here. Sorry, XAU. Okay, so here's another one for copper. I think it's XAU. So XAU. Oh, we'll just leave it in Australia. It doesn't really matter. Let's see. Is it XLU? I think it's XLU. XLU. I can't remember the name of the symbol. Anyways, I'll just leave it at that. Another one is silver. So that's XAG. We'll do that Canadian. Again, similar. It's very flat on a monthly basis. Daily, you can see that slow downward trend. Slight downward trend. That's silver. So this is why that's getting filtered out. Other examples. Let me see here. Australia and Hong Kong. Hong Kong showed some strength, but this one, as another example, Hong Kong shows some strength. Very flat on a weekly, daily, flat. I mean, there's a little bit of performance there, but when you look at the monthly, it's declining. So even in Hong Kong, another example, you'd think Asia is growing. Let me show you there. It's this volatility and downward trend. You're not getting the optimal performance is what you'd expect. So here, this is Australian and Singapore dollar. So these are some of the other ones that you would think would do well. Look at this, downward trend, daily, downward trend, monthly, downward trend. So again, that's why that's not included. What else we got here? There's a ton of them I can show you. Europe is another great example. Overall, let me just show you Europe. So this is a European equivalent of a stocks 50. Okay, that's the Euro 50. That looks pretty strong, right? Weekly, gone flat. Even with the US, has not gone flat. But I'll show you those in a minute. I'm just showing you different regions of the world. Showing you. Let's look at the Russell. Or US 2000, I believe it is. So this is another one that doesn't perform as well as the S&P 500. You can see right there, that's a monthly again, weekly. See that downward trend, that volatility just gets it filtered out. And then another one as an example is something like the New Zealand Japanese yen. So these are the ones that would be typically filtered out. All the different ones that you could consider, but you may not get optimal performance. So you see that downward trend there on that monthly, the weekly there, even on the daily with the upswing. So that's why they're not optimal. But here's the optimal ones, okay? First one we have is the US dollar. I think we've shown this, US dollar, Japanese yen. The idea here is to filter out volatile ones. So here on the monthly view, you can see that nice uptrend on the monthly. Same with the weekly, daily, right there. So it has a nice little upswing comparative to what else I showed you earlier. Another one to look for, Britain against the Japanese yen. So this is another performing, not just stock market, but generally the overall stock market and the currency. So here you can see it's somewhat stable, not a top performer, as I said. That's the monthly, weekly, another upswing there, and the daily. Nice, I mean, it's still volatile, but it's not like what I showed you before. It's more stable. And lastly, for more Asian trade, is this one. Hong Kong against the Japanese yen. Hong Kong seems to be performing a little bit. I don't want to show you the other ones that are not performing in the region. So when you look at China, it's not performing at all. It's either declining or gone flat. This one's a little more stable on the monthly, a little decent little trend, upward trend there on the weekly. Same with the daily as well. So they're all upswinging, which is good across all those time frames of daily, weekly, and monthly. Okay, so those are the ones that are performing. So generally, let me see if I might have the weighting here. Okay, so right here is what we're looking at. So as an example, Sharpe ratio of 1, annual volatility, expected annual return of 25%. Of course, these are very wild, unpredictable. This one's probably the more accurate one. 5% annual with a decent Sharpe ratio of 209, which is considered pretty good. And the annual return of 12.7. When you look at what's happened in January, this is all factored in, and it's all across the 3 time frames of daily, monthly, weekly. Generally, these are pretty good asset allocation. And as the other one to sort of get, as I said, lowest volatility plus maximum performance based upon the Sharpe ratio, you want to have, as I keep saying, an uncorrelated set of instruments. So that's what we have here. So the safety haven would be definitely all the currencies in Japanese yen, as well as you're going to get some decent performance with these two indices, the S&P and the FTSE 100 as well. So that's why we have that. Okay, so I'm going to, at some point in the next day or so, show other reports using this, and it will compare what I showed you across the bigger asset allocation, this one, versus the smaller, what we basically would have for this asset allocation with the weightings, and show you the charting performance and the difference, as well as the returns. I'm trying to, here's the deal with these reporting or portfolio optimization Python packages. A lot of them have bugs. Okay, when I feed it random asset allocation, just to get to this, took a lot of iterations to get these picked out. Took a long time. So based upon all these different combinations, a lot of these Python packages will throw exceptions, which means they're very, very, very buggy. So I have to go through probably up to 4 separate Python packages to pick out which charts, which tables can be generated bug-free. And there's 3 different ones I'm going to use. I'm going to package them up into my, it looks like a PDF and a video description of all this, and just to show you what we're after. So we're trying to get the same replication performance as if you're going to get it from a very high-end, inaccessible family office, let's say. Doing it with major assets and still being able to, as I said, get best performance with lowest volatility in the long run and short term, and the proper optimal weightings as well. That's what I'm trying to build out here. So the idea behind these reporting, this call it advisory service, newsletter, it helps people arm themselves to get proper information, to be simply educated, and then either invest based upon what they see, or better yet, if they have a financial advisor, to challenge and to propose these ideas to financial advisors, because they're taking your money, and it's a way to filter out those financial advisors that will quickly show which financial advisors are in the interest for you or in the interest for themselves, and feeding their pocket above and beyond using subpar, let's say, ETFs, because they have better relationships and better kickbacks and better incentives from those financial services and providers versus other ones that you should be in. Or if you can, go with a self-directed approach and use a large broker like Interactive Brokers that gives you the ability to get access to certain ETFs you would not be able to get otherwise unless you go through a financial advisor, and be able to get lower fees as well, because it's on Interactive Brokers, and you have a much better selection when you're on Interactive Brokers. So that's the whole point. People might ask, why am I only focusing on ETFs and Forex or currencies? From what I'm seeing, ETFs, I've done a couple of surveys last month. Overwhelmingly, people want ETFs. Okay, they're accessible, very low fee. They're very, very popular, very, very liquid. So that makes sense. Currencies, you can buy and sell in. You can see here we're dealing with Japanese yen. You don't get a lot of performance here, but it's safe performance. It's not risky performance. And again, those fees are negligible because it's currencies. Okay, so I'm going to shut up. So again, if you like what you're seeing here, you want to get in with what I'm building out here on the low introductory pricing. Just go to quantlabs.net/contact. Okay, I'm going to announce it on here on YouTube and all the social media, my website obviously, and Telegram. So it's coming. I'm hoping to showcase these and present it in a way where it's different views, but yet it's in chunks that you can understand, and filters out, as I said, with the process I just walked you through to eliminate high risk performance with very volatile moves. Right now it's like gold is showing that, silver showing that. Oil is not right now a top performer because I think we're on the last days of the performance, because oil has reached its price where it'll drop back because it's too high for consumers when they, for instance, fuel their car or whatever. Okay, so we'll leave it at that. So again, if you like this, quantlabs.net/contacts where you go. An official word, Google's now going to unblock my website, because now you have to do pay to play to get better performance of your website. But I do have the other domain as well, quant-labs.net. We'll talk to you later. Thanks for watching. Have a good day.